Many Americans were shocked to learn how little billionaires pay in taxes, according to that stunning ProPublica report on secret files of the IRS. Let's bring in John Bever, president of Phase 3 Advisory Services. And John, what can you tell us? Because the very rich are actually not doing anything illegal.
So we have a lot of taxes, but the focus of the ProPublica report is actually on income taxes. And so the way that is set up is you pay tax when you receive income. In fact, in 1920, the Supreme Court ruled that it's when you receive proceeds. So that would be income from wages or work, dividends, interest. If you own a stock or a building or a business, you don't pay tax on the increase until you actually receive proceeds. So it could be rent from a building or actually selling the building and then receiving proceeds. So that's how the system is set up, is to tax income. Now, what can happen is that the very wealthy, they can actually devise years where they don't have any income. That could be a massive investment they make into their business or buy a lot of real estate, and they live off of money they have in the bank. And then other years, they will receive the distributions from that business, and then they'll pay a large capital gain tax or a large income tax. But it can be very uneven. So they can have years where they pay very little and some years where they pay a lot.
What about business owners?
So business owners pay the same rates that everybody else pays. It's just that they have the ability to control their income a little bit more. They can choose to take a larger salary or a smaller salary. They can choose to compensate themselves partly through stock. They can compensate themselves with bonuses. They also can decide what years they're going to invest in their business and create some write-offs. So business owners have more flexibility, but they still pay the same rates that everybody else pays.
Democrats are pushing for a new wealth tax to raise taxes on corporations and the very wealthy. What are the pros and cons of a wealth tax?
So a wealth tax would be a new type of tax that we would institute. And remember, we already have several taxes, including sales tax, property tax, and other kinds of taxes. So this would be an additional tax. The theory behind this is that wealth is getting concentrated into the hands of a few people. We need to move that wealth away from them. There may be some very, very, very wealthy individuals that are seeing some concentration, but it might not be a tax issue. It might be something else. When it comes to a wealth tax, it can actually start to impair or impede the growth of the economy if you're creating a disincentive to create capital or to accumulate wealth.
Thanks so much, John, for all of that information.
My pleasure.